everyone. This is Daniela Cambone for StansberryInvestor.com. And before I bring you today's interview, I just want to share with you a report we have just put out that I highly urge you check out. Because with most investors going about life, investing, and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone, it's especially a good read at this moment in time. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends that you take immediately. So if you'd like a free copy of the report, you simply have to go to wakeupcall2021.com. Again, that's wakeupcall2021.com. Hi, this is Daniela Cambone, and welcome back to StansberryResearch.com. Brand new guest for you today, so please welcome to the show, Mark Moss. He is the market analyst for Market Disruptors. He also has his own nationally syndicated radio show. Mark, welcome to the Daniela Cambone show here at Stansberry Research. Nice to meet you.
Yeah, thank you. It's an honor to be here. I'm a fan of the show. I try to watch many of the episodes. And as I was telling you before, I'm a huge fan of Porter Stansberry as well. So
nice.
Yeah, happy to be here.
Well, thanks for that. It's actually, I want to say thank you to George Gammon, who suggested that I get you on the show. Now, for the folks familiar with your work, you are let's say a diehard Bitcoin backer, supporter.
Yeah.
You recently spoke at George's conference, Rebel Capitalist, about Bitcoin. And I guess that's going to be my topic for you here today. You've also been tweeting a lot about inflation and these incredibly high inflation numbers. They say 7%, but as we all know, it's definitely much higher than that. And this is Bitcoin's shining moment right here. The debate is, how will Bitcoin react? Will it come out, as the winner, as the knight that defeats the inflation beast? Or there's folks on the other side of the debate who will say, well, look, it just hasn't been tested yet in this environment. Only time will tell. How do you see it?
Yeah. Well, the one thing I'd say, just to frame this up for a second, I'm a big Bitcoin backer, as you said. You asked me if I was a Bitcoin maximalist. I would just say I spent 4 years writing a cryptocurrency research newsletter. So from 2016 to 2019, I personally researched and published over 1,000 pages of research on every crypto project and genre, from decentralized exchanges to privacy coins, et cetera. And after 4 years, I decided that I was just going to focus on Bitcoin. So I do like to say that, because other people are like, you're ignorant. You haven't ever done your research. I've published thousands of pages. But back to the question that you asked, I would say yes. That's the short, easy answer. The bigger answer is that over what time frame, right? And so that's always the question that people lose nuance over, I think. And so if you look back over, Weimar Republic of hyperinflation, you can go, dang, like the German mark, versus the gold trade was probably the best trade of the decade. Like, look, it's like a hockey stick. Look how much you could have made. But when you zoomed in on that, the volatility was insane. And if you were trying to trade that, you would have been shaken out over and over. So I would answer the question, yes, I do believe it will emerge as the best asset class, this inflation hedge. But if you're looking at it on a monthly basis, it might not always look like that.
Okay, but short term, how do you see Bitcoin's player reaction here? As you know, a lot of folks disappointed with the cryptocurrency start to the new year. Its worst start in history, really.
Yeah. So what I would say to that is, one, again, it depends on what time frame you're looking at. So obviously we know that Bitcoin has been one of the best performing assets in the world, 200% compounded annual growth rates since its inception. And then it depends on what period you want to look at. So year over year, it was up 30%. So it's definitely beat inflation year over year. If you want to look at 18 months or 24 months, now we're talking 300-400%. So that's beat inflation as well. Now, if you want to talk in the last 30 days, obviously the last 30 days has been down. So, we did reach a high of about 69,000. It's pulled back. It's kind of consolidated in this like 40,000 range. But again, if I'm zooming out, what I would look at is that over the last 2 years, it's gone from 3,000 to we're sitting in, in the 40-ish range right now. But I think if you look at it a little bit differently, it scaled all the way up to 65,000, pulled back, and it consolidated in the $30,000 range. That was like in May of 21 after China shut down all the Bitcoin miners. It then continued to, I think that took about 75 days-ish that it sat in that 30,000 range. It then shot up to 69,000. So from 65 to 69,000. And now it's pulled back into the 40,000-ish range, and it's consolidating there. So what I'm looking at is like the progress up. So it consolidated at 30. Now it's consolidating at 40. And so to me, that looks like positive progress. Like I said, year over year, it's done really well. The last 30 days, it hasn't. But again, I just don't think that we should be zoomed in that far. I think one thing about Bitcoin that's very difficult for a lot of people to understand is that it's a lot of things. So we're witnessing a technological revolution, not just a new technology, but a revolution. And so a technological revolution, there's been 5. So we have like the Industrial Revolution, steam engines and steel, electricity, automobiles, and telecommunications, microprocessor. And each one of those changed the way the world works. And if you look at like electricity, if we were back there during the day, we'd say, what is this electricity? What does it do? Well, it's sort of like this digital candle. Well, what do we need a digital candle for? Candles have been light for 5,000 years. It's been fine. And look, it's portable. Look how much better it is. But electricity changed the way the world worked. And I think with Bitcoin, we're also witnessing this technological revolution. And so it's a lot more than just what we think it is right now. And so when you're looking at a new technology, and this is just a key point, that when you're looking at new technology, you can't really look at the daily price of it. You're really trying to look at 2 things. One is the growth of the network. Are more users coming on? Is Metcalfe's law kind of playing out? Is the network growing? And then 2, is there development happening on the network? Is it growing? And so as long as those 2 things are going, then I think the short-term price is kind of a distraction in my opinion.
No, and that's really well said. And I just had Max Kaiser on, one of the biggest proponents of Bitcoin out there, who basically saying the same thing, that we just get so focused on the price, and it's much more than the price. I think for the folks who maybe are invested in Bitcoin but aren't as close to Bitcoin as you or Max Kaiser are, it's hard to say don't focus on the price when they've personally put in a lot of their investment money into that asset.
Yeah. So what I would say to that is, again, if you're investing in brand new technology, so, I mean, go back and look at the darling Amazon, for example, right? And so it's had massive volatility over its, the last 2 decades. I mean, it's crashed 80, 90% multiple times. But again, if you believe in that Amazon was going to become this world leader in e-commerce, then you kind of have to stay in it. And I like to go to Warren Buffett, who's definitely not a Bitcoin fan. But Warren Buffett has said many good things. One of the things, well, his partner Charlie Munger said, is that the big money is not made in the buying and the selling; it's made in the waiting. And so Warren Buffett said, if a new investor came into his career and knew he only had 20 trades his entire career, he could outperform everybody. And that's because you would identify the big trends, you'd get in early, and then you just have to wait for that trend to develop. And I think that's what Bitcoin is. Bitcoin is the biggest trend that we'll ever see in our lifetime. I believe over the next decade, we'll see most of the world's wealth move over to Bitcoin. And I think if we allow that to develop, we can have massive returns. But when you're trying to get on something so revolutionary, I just don't know if you can manage it on a monthly basis.
Well, let me ask you this, Mark. To that point, you obviously speak very passionately about Bitcoin. You say in the past you wrote about other cryptocurrencies. What was that moment for you that you realized, and what made you realize that you just wanted to focus on Bitcoin? Why Bitcoin? Why not Ethereum? Why not Solana? Why not, whatever, Dogecoin? Pick any other crypto. Sure. What made you just focus on BTC? Why is that the winner for you?
Well, I think you have to step back and understand what is the problem that we're trying to solve. So you mentioned, I just spoke at the George Gammon's conference last weekend. Ron Paul spoke, which was amazing. He's kind of passed the torch on to people like George and I gave a presentation on In the Fed, right? That's what Ron Paul started that movement. And I talked about In the Fed, but why? Who is the Fed and why? What have they done wrong? And so basically it's a story of central banks creating money from thin air. And so you asked about inflation before. I look at inflation as the Austrian view of inflation, which is it's the money supply that inflates. And when the money supply inflates, it starts causing distortions all across the market. It transfers wealth from one group of people to the next. George Washington, our founding father, warned us that the bankers would use inflation and deflation, and the children would end up owning nothing on the continents their forefathers had conquered. And so it's through using inflation and deflation, increasing the money supply and decreasing the money supply, that causes all these distortions. And I broke down in the talk I gave with a bunch of charts to show even societal distortions. So since 1971, when we broke apart from the Federal Reserve, or I should say, sorry, from the gold standard, the obesity rate, the divorce rate, the unwed mother rate, the incarceration rate have just completely skyrocketed from that day. And it's all because of the money. So that's where I identify the problem. And then if we want to solve that, then what we need is a new system that no person can control, not just a different group of people, but no people. We need a system that has a fixed supply cap instead of an unlimited supply cap like the US dollar or like a lot of cryptocurrencies. And then we need something that has a fixed rule of law instead of governance. Right? We don't want changing law. That's one of the problems that we have today, is that we used to have a constitution that was a rule of law and I could set my life on it. But today we're ruled by men who are arbitrarily changing the rules all the time on us. So let me give you an example back to cryptocurrency. So if I want a fixed supply cap, Bitcoin has 21 million. That's it. We want something that can't have the rules changed on us, immutable law. And we want something that's censorship resistant. Nobody can steal it from me and nobody could stop it, block it, prevent it. To me, that's what we're trying to solve. The world didn't need faster money. Like Venmo and PayPal is pretty dang fast. Like I don't need faster money. So if we want to compare, to your point, like Ethereum's number 2, right, out there. And so the big gripe was that we know Bitcoin has 21 million, but what's the supply cap of Ethereum? So we don't know. And obviously, if we were buying stocks, we'd want to know what the market cap of that stock is. We'd want to know how many shares of stock were outstanding. And so then we can get a market cap. We know Bitcoin has a fully diluted supply of 21 million, but what was Ethereum's? We don't know. So about 5 months ago, I think 5-6 months ago, Vitalik Buterin, the leader of Ethereum, got together and they changed the entire monetary issuance of Ethereum. That sounds like the Federal Reserve. That sounds like the problem that we're trying to get away from. I don't want more of this. Right. We have ones like Cardano or, all of these proof of stake ones that have decentralized governance. Mm. And so what that means is whoever has the most tokens can stake them, and whoever stakes the most gets the most votes, and they can change the rules. I don't want anyone to change the rules. That sounds like the same system that we have today. And so really, if you're I guess that's the answer. Those are the problems that I'm trying to solve from. I believe out of 15,000 cryptocurrencies, there's only one that can do that, and it's just Bitcoin.
And you're looking for complete freedom, basically. You mentioned the gold standard before, so I'll bring up, as you know, this very polarizing debate between Bitcoin versus gold. But I think the two things these assets have in common is that people are so passionate about either loving the asset or hating the asset. So I'm just going to bring up Nassim Taleb, who has compared Bitcoin to a disease. He called it worthless. It's not a currency. It's not a store of value. It's not an inflation hedge or haven for investors. There's other people who would echo those thoughts. So what do you say to those folks that just don't understand Bitcoin, hate Bitcoin, think it's just a massive speculative bubble? What would be your response?
Well, the first thing I would just say real quick is that after 2008, after the financial system crashed, I became a gold bug. And so I've been a gold bug. What I found is that I'm a sound money advocate. And so I don't really want to have Bitcoin and gold fight. I believe Bitcoin's superior, but they're both pushing this sound money narrative. But back to the quote that you're reading, I think that is extremely arrogant position to take. And it troubles me that anybody, especially Taleb, would have that viewpoint. And here's why. I believe in freedom. I believe that we have the freedom to choose. And if you look at nations that start crumbling, say Venezuela, for example, they start going kind of back to a barter society. And so they're trading water for batteries, for example. That's what they're using for currency. Money is what we say money is. Mm-hmm. I have the right to trade anything I want for anything I want, including my labor. So for him to say that it's not a store of value. Well, it's been my store of value and it's made me a lot of money. I started buying at $300. It's been a very good store of value for me. We know it's a store of value for MicroStrategy and other S&P 500 companies. We know it's a store of value for countries like El Salvador. So who is he to say it's not a store of value? It's actually been a very good store of value. And so for him to say that and say, it makes me think that he believes that people don't have the right to choose where they want to store their cash. Some people want to store their money in Pokemon cards. Okay, great. Some people want to store it in real estate, and some people want to choose gold or Bitcoin. Of course, what you store your wealth in matters. But I can't believe, especially Talib, after writing that book, Anti-Fragile, would make a statement like that.
Okay, so that's interesting. You said you also embrace gold. So you're one of the few out there that have embraced Bitcoin and gold. You say Bitcoin is stronger, the stronger horse in the game here compared to gold. Why?
Again, right? A candle was light for 5,000 years, but electricity was a better version of that candle because it worked different. And so if you look at the properties of money, so gold emerged as the best form of money. And money has to have, many principles: portable, divisible, durable, saleable, etc. But gold isn't portable. And so as the world started to develop, trying to get gold from the United States to Spain, for example, was very difficult. And so you'd have to sail it across the sea, ships would sink, pirates would take it, etc. And so then we started using ledgers, and then gold went into banks. It became centralized. And then we had a layer 2, which was paper gold certificates, which made it very easy to trade gold, but the gold was centralized in the banks. That led to the United States Act 6102 seizing all the gold and stealing it because it was already in the banks. And so gold doesn't work today in today's world in a sense where you're somewhere else in the world than I am. And I could easily send you Bitcoin right now, but I can't send you gold. The only way I could send you gold again would be if it was in somebody else's safe. And then we used a ledger system, but now we're required to trust that third party. And of course, that's the problem. We don't want to trust. Bitcoin is trustless. And so I can literally send you Bitcoin peer-to-peer, as opposed to gold. We have to trust that it's in there. And again, history shows that it hasn't worked out very well.
Mark, I guess just to wrap here, final thoughts for investors watching, for the folks who maybe haven't stepped into Bitcoin yet, or maybe for the folks who are all in and, like you said, concerned about what they're seeing, but you say, look at the bigger picture. I guess just bring it home for us as we're starting the new year, and how, just some thoughts for 2022 here.
Yeah, a couple thoughts that I'd bring it home with is kind of going back to inflation for just a second. And so while we're getting caught up in this inflation versus deflation academic argument, I think it's much easier for people to zoom out and go, when the central banks increase the monetary supply, whether through monetary or credit expansion, that leads to inflation. And it affects us all differently. It depends on where you live and what you're buying, et cetera. But ask yourself the question: do you think the governments of the world, the central banks of the world, will print more money in the future and it continue to expand the credit base, or will they do less? I think the answer is more. So that means there's more inflation coming. Don't get caught up in the nuance of this academic argument. That's one. And then if you think that's the case, then how do you protect yourself from that? And you want to go into an asset that nobody can create more of, which is why we're seeing this massive kind of rotation from growth stocks into value stocks, and specifically commodities and energy, because those are things that can't really be manipulated as much. So one, kind of look at the frame of where the world is going, I think, one. Two, and then I think understand why it is that you're buying it. So again, if I was buying Amazon a decade ago, I believed it could become this e-commerce leader. I have to wait for that to happen. And if you believe that Bitcoin could give us an option to hold our wealth in a way that central banks can't inflate it and steal it from us, or stop us and block us from using it, then we want to buy it early, and we want to wait for that to come to pass. Zoom out, have that long-term perspective. That's my advice.
Mark, thank you so much for your time today and all your thoughts. Much appreciated.
Okay, thanks so much, Daniela.
And thank you all for watching. We'll have much more for you on stansberryresearch.com. And don't forget to sign up for premier content at danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.